Good afternoon, everyone. Welcome to this week's Mortgage Minute. My name is Art Alvarez at MortgageWorks, where we have the answers and they're on the house. Want to jump right into giving you a rate update first. As you know, we tend to try to do that. There's our rate grid showing current terms available for various types of loans, conforming, 30-year fixed, 15-year buy downs, FHA, VA, as well as jumbo and second mortgages, both HELOCs and HE loans. Hey, one thing I want to tell you or remind you, you hear on the news a lot the last couple of weeks that mortgages are now in the eights. And during this week, I've had some conversations with some realtors who are saying, oh, I hear mortgages are in the eights. Well, not true. For most, good qualified borrowers with a decent credit score and so forth, we're still in the sevens, mid to high sevens, depending on the product. Certainly, we're in the sevens, low sevens for FHA, VA. So if you keep hearing that rates are in the eights, if you're talking to lenders who are telling you rates are in the eights, or if you're an agent and your client is being told by a lender they're talking to that conforming loans are in the eights, not quite true. We can offer you a better deal. Now Jeff's going to also pull up the 5-day 10-year Treasury bond chart, and it's an interesting chart. And the last couple of days have been really interesting because as you can see there, we were at a pretty high level on the yield end of last week, and early this week we were approaching, in fact, even exceeded a 5% yield around Monday, basically going into Monday, and then Tuesday, Wednesday, it dropped quite a bit, and then today, early today, we saw the 10-year yield going back up close to 5, and yet by mid-morning, a pretty significant drop back down to around the 485 level. So a very interesting change in the yield over this last 5 days. And so let me go over a little bit of what I think is going on there in terms of data points. This week, most of the data points are related to new home sales, GDP or gross domestic product for the third quarter, and core PCE, personal consumption expenditures. The first big number that came out this week was new home sales, reported at a 19-month high, up 12.3%. That was quite a move upward. Now, that's not normally a data point that's going to move the market much, but it seemed to do that to some degree, given that shows a pretty strong number in terms of increased sales for new homes, not resale. And then today, the gross domestic product, the GDP for the third quarter, was forecast to be 4.7, but it came in higher than that, 4.9. And so initially, the markets, the 10-year bond yield early this morning was again approaching 5 on this very, very strong number. But yet here we are midday, and of course on Eastern time, we're essentially at the close of the day. It's dropped back down to 485. Not what you would expect given the very strong GDP number, but what it underscores is the financial markets, banks, economists are not fully convinced that this jump in the third quarter GDP, mind you, it was up quite a bit, 2.1 in the second quarter, more than double in the third quarter. The markets, economists, banks are not convinced that this is going to hold. They still see a lot of signs that the economy may start weakening soon. And one of those data points that I don't actually have on the chart here is initial claims for unemployment. This week's number actually was higher than expected. Not a lot, about 210,000 versus 207,000 forecast. So that could have some effect on the bond yield dropping down from early this morning because of that strong GDP number. And then tomorrow we have core PCE, personal consumption expenditures. Again, that's one of the Fed's favorite inflation numbers to look at. It excludes food and energy. It is forecast to be up 0.3% in September, and that's up 0.1% from August. So we'll see how that plays out in terms of affecting the yield going into the end of the week. But, the little bit of good news is the 10-year yield didn't blow through 5% or didn't hold at that level. It's come back down nicely. So hopefully that bodes well for what we're going to see at the end of the week tomorrow. Thank you, everyone. Thanks for listening. Thanks for watching. Stay tuned next week for another edition of Mortgage Minute. In the meantime, I'm Art Alvarez at MortgageWorks, where we do have the answers and they're on the house. Take care.